Want to turn our attention to something that happened earlier today on Yahoo Finance. The platform spoke with Careerbuilder CEO Irina Novoselsky about today's big jobs report. We first asked her, however, about the disconnect between job openings and available workers.
It's a really interesting time in the market. And just what you heard, we have 50% more supply. And so you would think this is such a great time for companies to come in and be able to hire talent. And we're seeing 30% job growth. However, on the other side, we're 25% down on job seekers looking and applying for jobs than pre-pandemic numbers. And it's so interesting because we're seeing the dynamics of this play out in the market where companies are offering incentives, benefits, trying to woo candidates back into the market.
And Irina, we did hear from President Biden a short time ago reacting to the better than expected job numbers. I want you to listen to what he had to say and then get your reaction on the other end.
The last time the economy grew at this rate was in 1984, and Ronald Reagan was telling us it's morning in America.
So President Biden, they're saying essentially, look, the momentum is headed in the right direction. But I wonder if you walk through the numbers that we got this morning, what are the weak spots that you see? And are there reasons for maybe some concern here, some red flags that you see in terms of how sustainable this is, especially with the shortage in supply?
And on the sustainability of the job growth, we're continuing to see companies post. But when you look even at the NFIB index, one of the things that they mention is that there's a 46% open rate of businesses not being able to fill open jobs. And that's a 48-year high. We're seeing that really only continue with about 11% increase of the population retiring than pre-COVID. We're seeing about 7% not participating increase, 7% increase in the population that are staying out of the workforce due to childcare and elderly care. And one of the most interesting things is we're just seeing double-digit sentiment on the census pulse survey saying that people are just not looking for work right now. And that's a combination of things. And that's going to drive wages up. That's going to put more pressure on companies to provide services. Many of us have been on the consumer side of this, waiting in lines, seeing a lot of signs saying we're hiring, excuse the slow response time. So that's going to continue. And one of the interesting things we looked at is it different now that some of the states have stopped their extended unemployment benefits?
Yeah, when it comes to maybe how much power workers have now or what they're expecting when it comes to wages, I mean, what are you seeing on that front at Careerbuilder? Because it sounds like the expectations are mounting for workers who have gone back into the office or to work since the pandemic hit.
Zach, it's both the expectations and the competition from our clients. They're wanting to retain existing employees. The quit rate on existing employees is growing and higher than we've seen in several years. And so they're looking at different things. And we mentioned that 50% of companies are looking to increase their minimum wage. 56% of those are looking to increase it above $15. When you look overall, about a third of existing employees are looking and expecting over a 5% wage increase this year. So the pressure from both the hiring market and retaining your existing employee base is continuing to grow.